Is the stock market setting up yet another massive trap? Well, there's only one thing that's going to save a crash from happening right now, which means defending the higher lows. And before we break that lower low on the monthly, we have to go through a four-step recipe, which creates a dip, which means we stop going up. We start getting full candles, which means we lose momentum. Then we start going down. And then that last thing is losing the 50 DMA. So what this really means is that the Dow Jones and other ETFs are starting to really lose momentum, head and shoulders below the 50. And for the S&P, if we do get dragged lower, that's confirmation. So it's a very simple story for you this weekend. We have a four-step recipe with the fourth one not quite there. And if we lose that 50 DMA at roughly 509 on the S&P and then also go below 504, stock market crashes here. It's that simple. We've now had the worst week going back to October. Cool. If we look at the heat map here, though, not everything had a bad week. Mega caps or big tech actually did quite well. So that's really interesting. If it's the worst week, maybe that's the reason why the S&P is holding up. So as big tech kicks off earnings this week, we're going to find out whether or not there is more continued strength or if the higher low on the monthly pattern holds. Very simple. We're also on the doorstep of going back into fear. If we get a dip of 2 points, we're going to be back into fear. That'll be very important. A year ago, a month ago, a week ago, we were in greed. The market can definitely cool off because Wall Street is risk addicted and they're getting shaken up by bad news as it piles up. They're fleeing to safety. Cool. We had this 24 to 48 hour warning. And what happened? Joe Biden cuts his weekend trip short for urgent consultations. All right, this is a live topic. I don't know what's going to happen. I'm just trying to prepare you. The S&P is heading for a rough patch as buyback blackout arrives as we go into earnings. Over 80% of companies can't buy stock this week. Oh my God, are we going to get a collapse? And Wall Street is expecting a subdued earnings season from corporate America despite the first quarter stock market fireworks, which basically means JP Morgan, right, had a big sell-off, 4% on Friday. American exceptionalism is on display in the bond market. We're going to find out whether or not that exceptionalism translates over to earnings. More companies are defaulting over and over, S&P 500 says. The second highest since 2008. Cool. And some stealthily bullish news. The Fed favors reducing monthly asset runoff, paced by roughly half. That would be slowing QT fairly soon, right? Some stealthily bullish news. So as Netflix kicks off earnings on Thursday after the bell, I think this is really important because as I just mentioned, hey, if this has been the worst week since October, tell Megacap. They did not hear the message. They're all doing really well. So there's a lot on the line here because the Magnificent Seven influence over the S&P has never been greater. They now account for over 30% of the index. That's a lot. So if we look here, we got JP Morgan on the left. We got Netflix on the right here. Huge run up on both. JP Morgan beat earnings and it had a big sell off. It's down by 6.5%, losing that 50 DMA or the level we just talked about. Is Netflix going to do that same thing? We want to make sure we pay attention to that into Thursday. If you don't mind, please doing me a favor and please considering to smash that thumbs up or subscribe to the channel. I'm planning to update on all of this week. Thank you very much for your support ahead of time. So what this really comes down to is whether or not Netflix is going to not only beat, which right now we're expecting a small beat of 2.7%, but whether they guide higher because they're the first of the FANG stocks, which is going to really tell us what market participants believe is going to happen from here. Another way of thinking about this is RSP or equal weight S&P 500. We're now either forming a double top or we're going to catapult higher. Equal weight S&P 500. How do they do after earnings? Well, we're going to find out by the end of the month because on the week of the 23rd and the 30th, we get most of earnings reporting. Those are the thick of earnings. And as I just mentioned, we're expecting a subdued earnings, even though there's been fireworks in the first few months of the year or the first quarter. And here's another perspective. So this is from Fortune. They're telling us that there's 5 themes to watch as earnings season begins. But basically, a little inflation in the system isn't a bad thing for profits. Why? They're going to pass on those costs and they're going to make you pay more. So that's pretty much it for the headlines this week. Please make sure you stay tuned until the end because I do have some charts I want to review to give you a little bit more flavor for the week. But to give you the high-level notes here, we have There's likely going to be a lot of noise this week. So, right, geopolitics, earnings, the Fed, inflation. We want to focus on levels. Let's keep the story very simple. If we go back into fear, right, we want to pay attention to that. We talked about rotation, and I do want to circle back and talk about equal weight in the Dow versus the S&P and the NASDAQ. Key dates for the week. Keep in mind, we got a first and second half of the week. We're closing at or near the low of the week here. So if we pop over here to SPY, let me just make sure I didn't lose any lines. So the first thing I would note here is that, let me just go back to my notes, make sure I don't miss anything. Not that one, go to here. All right, first and second half of the week. So the saying is that when you close at or near the low of the week, what usually happens? Follow through selling. And as I mentioned on yesterday's video with that 24 or 48 hour warning, well, if we're going to get some kind of nasty shock or a surprise, we're probably going to get follow through selling into the beginning of the week. The question is whether or not it will snap back and actually recoup or close the week out green. Honestly, I don't know. I wish I could tell you. I wish there was going to be global peace, right? I wish for a lot of things, but hope is not an investment strategy. So with the most important data point, in my opinion, coming out on Monday, because we could be getting a light inflation report out of Canada or a second print because, frankly, my country sucks, right? I'm Canadian right now, and man, there's no inflation here. Our country's shrinking. Inflation appears to be an American story. We're already at 2% core CPI, and we're growing at 0.1 on a month over month. And Europe's already at 2.4 for a headline CPI. So is the CPI print in America just a bump along the road, as Jerome said, or is there more to the story? Let's let the market decide. And then with Netflix earnings, I think the news versus the reaction to the news will be very important. As we round out the end of the month, we've got the thick of earnings, as it just showed you. We got inflation, or the PCE, Fed's preferred inflation gauge, coming out on the 26th. And then the Fed decides on May 1st. So that's really interesting. In terms of SPY levels, pause the video or go to the link in the description if you want the resources. But what this really means is that we have a lot of key areas here, but to make it really simple, and this is where I'm going to elaborate on a few more charts. So I talked about that 4-step recipe, which we have right here. The 4-step recipe just means we stop going up and we go down, but we have to lose the short-term price. Otherwise, we're not going down in the short term. I can draw all these fancy trend lines, but if we're above the short-term price, that's like a good time to be long. When we lose the short-term price, that's a good time to not be long or to not be buying more. Why? We're losing momentum. We're below the short-term price. By definition, it means we're losing momentum. We're down. So until we lose the short-term price, we're not going down in the short term. I know that sounds incredibly simple, but that's it. Here's the important part, because you watched until now. I'll make this so simple for you. You're going to want to subscribe and watch every video I publish. We've already had a 1% dip. If we now lose 510, which is going to curl up to become that 50 DMA, hey, we get the last part of the recipe here, right? We got number 4. All right, well, 4-step recipe, the dip should be here. What would confirmation look like, though? Well, closing Friday below 509, as I just told you, we have important catalysts, and I don't know what will happen in the first and second half of the week. But I know that if we close Friday below 509, I'm getting confirmation. And then finally, if we go below 504, that one chart that I told you really matters, that monthly one, this one right here at the very top, it's broken. And this did not break in 2020. This led to a 50% rally in 2020. If we break it here, it means all of my warnings, which I've been laying out for at least a couple of weeks now, have all been confirmed. And they're confirmed with levels, which is what I told you is the most important thing for this week. So if we know there's going to be a lot of noise out there, right? Forget about the news, right? Focus on the levels, which is what I just showed you. We got dates and we got levels that really matter. If we close the month out after earnings and after all this inflation data and we're lower, hey, that's bad. How am I going to argue that? Which means we could be making progress for a correction, or roughly 8 to 9% if we come back down to roughly 480 or that previous all-time high. I want to remind you of what happens when we backtest all-time highs. It's usually for buying. It's not for selling. Let's look what happened the last time we hit an all-time high. And I don't know if this time's different. All I know is that if we make it over, backtest the all-time high, which happens right here, again, resistance turns into support, that's a 50% rally. Yes, a crash did come, but we went up by 50% before crashing. I don't know if that same thing's going to happen here, but what should happen if we blow this low out or fall below 504 on SPY, we should at least find some dip buyers here. That's what I am expecting. So until proven wrong, I'm trusting my levels. I'm trusting the process, but I'm not going to pretend like there's not warning signs out there. If we look at RSP, woof, right? Already got that monthly lower low. The one thing I said we have to save. Yeah, that doesn't look good. I'm not going to deny it. We look here to the Dow Jones. The Dow Jones is already on its back test or reattempt of testing its all-time high. What does that mean? Before SPY back tests its 480 area, we're going to see other charts like the Dow Jones already hit it and either go lower, hit it and go sideways, or hit it and bounce, which means SPY doesn't actually go back down to 480. Maybe only down to 504. Maybe that's it. Maybe the crash is over. There's one final thing I want to leave you with, because there's a quote that if there's measles in the sky, it is time to buy. So I know that sounds really bleak. I know it sounds really dark, but honestly, this has worked really well for me. In terms of stocks, when we get a big, nasty shock and there's nothing else which has changed in terms of the status quo, which basically means if the pattern holds, that's a good time to buy. People get scared and they usually sell when we're right on support. Where are we right now? Let's look at the evidence. We're on a monthly higher low, which means we're actually still pointing up like a rocket ship. We're still on number 5, which means we're still going higher highs, still going higher lows. The pattern is intact. Not only is the monthly chart right on support, we're right on the short-term price. Everyone says they want the dip. And then when the dip finally presents itself, they get a little scared, right? They get always scared. So let's look back in the past and see whether or not that strategy worked. And I'm cherry picking a certain sample set here, but let's look. Bounce, 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 bounce. Then when we spend meaningful time below and also lose the other average, yeah, it's time to sell. But in the meantime, until the crash is confirmed, I want you to pay very close attention here. All right, that's it. There's another video queued up here on the left-hand side if you want to watch more. If not, maybe you want to subscribe and come hang out with me at 9:15 a.m. I go through Q&A at 9:30 every weekday. Thank you so much, and I'll see you on the next video.